Welcome,
Am
guys.
I co-host?
Welcome, everybody, to Latte with Leo. And today, you already know what we do. We usually do this every first Wednesday of the month, but due to conferences, excitement, and fun, we moved it to today. So we have Blake in the house today, and we're going to be discussing some things. So prior to this call, me and Blake had a conversation, and today we thought it was imperative to talk about 1035 exchanges. And Miss Takira, you must turn on your screen. I just made Shamika turn on her screen and show us her shadow.
I ain't had no problem because I got mad questions about this 1035 exchange.
Okay. Just wait for a second. All right. So we're going to talk about what you're looking for. Now, I'm going to talk strategy. There's no exact rhyme or reason that I could tell you, yeah, this is a must 1035 exchange. For some of these situations, what it will take is creativity and understanding. But before we even start, one of the things I want to be able to tell you is that in order to do any type of 1035 exchange, it must be life to life, not anything like a 401k to throw it into a life product. That doesn't work. It has to be two of the same type. So, hold on. Hello? Yes, how you doing, Nia? I'm blessed. We're in the meeting right now, training on IULs. Yeah, it's okay. No worries, no worries. Go ahead.
Oh, wow. This is an extra.
She didn't know if she was on this Zoom or everybody that's driving seems to be having the same questions. It's our Zoom, but here we go. Oh, we got Gabe Brown. All right. So for 1035 exchanges, let me start by saying, like I said, it has to be insurance to insurance. There was a confusion at some time where people were trying to put funds from a 401k into an IUL. Let's be very straight with this. An IUL is a life product. We can use it for retirement because it creates distribution. All right. So let's start with that. Now, I'm going to tell you that there's no, when you're doing this, this is where it came into my mind where you're going from gain, maintain, and transfer wealth. That whole thought process that came to my head, that was because of an IUL that I was thinking about. So when you do set something up, you want to make that's where the life insurance part is the transfer of wealth. Everything else is now when you start putting things in, and the 1035 exchange is very important. Now, what is very important to keep in mind is that when you're using this as a strategy and you're talking to clients, remember, can anybody tell me purchases, mute, purchases, what is it that purchases life insurance? What is it that you need to purchase life insurance?
Repeat that again because you was
What
like
is it that you need to purchase life insurance? Oh, look at that. Ali put
health and
both
wealth.
age
I mean,
and
health, age and health.
money does not really purchase life insurance. Is your age and your health. So you're going to hear about situations today that the common folk would not even think about suggesting to do an IUL, but there was a good situation. Person was healthy. So one of the first ones that I'll pull up that I talk about a lot, I believe the lady was 67. Correct me if I'm wrong, Blake, because she was 69. That's the oldest IUL I've ever written. 69 years old. Okay. Um,
That's
I'm gonna
not mine.
I'm gonna tell you, you're just chiming in. I'm going to tell you about the situation so you guys could see where it came in my mind and why I did it. So I was looking at the situation, and the lady had a policy for 20 years. She was paying $165 a month, right? You could write these stats down. She was paying $165 a month, all right? And she was healthy somewhat. Here's where it takes a turn. The lady did have breast cancer 5 years ago. So it was a risk. All right. And I'm going to give you guys some tips that you should be writing down in order to see if you should want to proceed with writing some of these, especially if you're not as experienced in writing IULs. You should really, really, really contact F&G risk assessment. Blake, if you could put that in the chat for them, because if you put it in the risk assessment, they will definitely run through the situation and tell you if it's worth doing. I'm going to tell you the truth. I didn't. I just knew there was 5 years. She was cancer-free. So I'll give you that. And we were looking to try to do an annuity. What she was going to do is take her money out of her cash value. She had a whole life. But I decided to do a policy review, even though she's 69. So we had to meet a second time. So she sent me her policy. And what I noticed, how much, this is a question for those of you, please, if you know the answer, if you don't, just try. On a regular whole life, how much interest do you get as cash value? Anybody?
8%, when you have a traditional cash value, it's like 8%.
On a whole life, if you find a whole life that gives you 8%, let me know the company. I want it now.
3 or 4%?
It's anywhere between 2.5 and 3%. The highest I've seen is 3.5 a long time ago on a whole life. That's a flat rate. Just so you guys understand that. It's very important to know that. Now, what is the average? Remember, we're talking averages. With IULs, we can't talk, there's no guarantees. What is the average on F&G's IUL?
6.
6 point.
Yeah,
6.
6.12.
6.4, 6.1.
Let's keep a range, 6%. So I'm giving you the situation with this lady, what she wanted to do. So I got through all my questions. Like most of you know what my questions are. My last question is, what is your goal? She's, somebody's posting. Look at this. All right. What is your goal? So, and again, you can't know what the flat rate is on a whole life unless you get the policy. Don't make assumptions. Make sure you get the policy because they'll tell you she was getting 2.5%. And she's had this for over 20 years. So I asked her what her goal was. Her goal was to be able to put money in, right? Grow her money, but she did not want any time limit as to when she wanted to touch it. She wanted to be able to touch the money whenever she wants. And she heard there was something like that that could be done. Her kids were grown. Again, part of the questionnaire, her kids are grown. They're adults, married. They're the beneficiaries of this policy. So when I looked at her ultimate goal, I was able to reduce her death benefit to about $100,000. She was going to pay less than the $165 a month, and we were going to roll over her $18,000 into an IUL if she can get approved. Now, there's no harm in trying this because if it doesn't work, she still has the other policy and she doesn't lose her money. This is why it's imperative that you're careful when you're using IULs as retirement and you're having people cash out 401ks. There's a harm that could be done. So you got to be careful. Please, please, please run that situation by someone that would know. And don't call Blake on that. He does not talk about anything that has to do with taking money out of people's accounts. And you know what? The annuities department don't do that because they don't want responsibility. So it's going to have to be an agent. I'm just letting you know now. So in this situation, it's a safe risk. All I'm doing is rolling over. She's healthy enough. She's 69. And that's exactly what we did. That's not a typical situation, but now you'll see that you can do it. Now, the important part was the follow-up and knowing, I'm not going to lie. I don't care that Blake is here because he can admit to this, but he can't admit to it on a recording. So he could always deny this part. 1035 exchanges with F&G are not easy. They're not very friendly, meaning they're good people, but they do not get done right away. You need to be on it consistently. Now, I would not do a 1035 exchange for anybody who has $2,000 or less. It's pointless. It's not going to do anything for the policy. It doesn't maximize the policy. It's not going to make you more money. It's not going to make them much more. They're probably better off getting the check from the company and then sending it to F&G themselves. Do not go through the efforts of doing it in an application because it's going to drive you nuts. Please take heed to that. Now, if you want, Blake, you can actually show my illustration. If you don't have a test, you can actually show the one for Colette Wallace. That was the one that we did that's 69 years old, and you can share the screen and walk through it. The floor is yours, sir. And guys, participate and ask questions.
I have a question.
Yes.
So why not an annuity at her age? I know you went over the breast cancer thing and she's healthy and all that. Why not an annuity?
I will not do an annuity because it's bad enough that she's going to take out a loan. She's going to put it into an annuity and also lose money on fees. And her life insurance is no longer necessary that large. She wants to change. She wants to reduce her life insurance. So I would not do an annuity for $18,000. It's not going to give her the same jump on a fixed index annuity. She's not going to gain as much as she would when she still does want life insurance, but she wants that policy reduced. So I put it in the IUL because it's going to give her more money plus an annuity. You're locked in for a certain amount of time before you have no surrender charges. And the lowest annuity you have is probably 3 years, and she's 69. She wants to be able to touch the money tomorrow. She can't do that in annuity. She could do that in the IUL, especially if it's being funded with cash. I hope that answers your question. Good question, by the way, because that would be the obvious solution to go because of age. This is why I tell you guys, please just listen to the whole thing when you're talking to a client, because your mind will automatically go somewhere right away. That's where I went. I mean, if I showed you my sheet, the first thing I did is, oh, retirement annuity. I wrote it. There's one that we set and I had to just ask her everything. And then when I asked her a goal and I wrote it out and I looked at it, I was like, yeah, an annuity won't make sense because I would have to lock her in for a minimum of 5 years. And at $18,000, when you look at the illustration, it didn't make sense. You put it next to an IUL, it blows it out the water. So if you're ready to share that, Blake, is yours.
Absolutely. Pulling it up right now. The other big thing I see all the time with 1035s is, are we rolling over the account value or the surrender value? Does everyone know the answer to that?
I'm not
Account
speaking.
value.
Carlos said account value. Alimnish said surrender value. Wait, before I move on.
We want a tiebreaker?
Anybody got, we got one of you.
I feel like you got to see what it is and where it's coming from, and to determine if the account value or the surrender value makes sense when you're going to move that over as a 1035 exchange, because it depends on what type of account is coming. Is it qualified? Is it non-qualified? And you got to see where you're going to put it at. So if you're going to put it somewhere, wherever, if we decide to put it into a IUL, we need to see where it's coming from. Is it beneficial for the client? Is the taxes, is the penalty, and where it's coming from? That will determine where you're going to do what you're going to do with it.
Well, let's remember we're going from life to life.
Okay, so if you're going from life to life, then you're going to say, okay, if I got it and it's coming from life to life, let's see where it will be more beneficial. Because I've had a client where I had to look at it and I said, okay, am I going to put it there? Am I going to put it there? And I need to see where will my client get the most benefit from, as opposed to saying, where will I get the most benefit from? So if I see and I run my, you know, clients and see how I put it where I say, okay, I want to see what that illustration look like. If the illustration look good one place, because I might have two choices. So if I look at one illustration and I say, okay, how my client going to benefit from this? And then I do a second thing and see how it look, then I'll say, okay, well, my client will benefit more from there. So I think, I don't know. I
Is it
feel like
surrender? Is it surrender or is it gonna be the cash value?
I changed mine. I think it's surrender when I think of it.
Uh, it,
Because
you
suppose
could
the
tell.
surrender and the account value is the same, then it wouldn't matter, right? But
Yeah, exactly, Carla. Yeah. And
yeah, the surrender and that. Okay. Oh,
yeah,
wait,
So,
so
I'm sorry.
but before you move on
it's
to that,
yeah.
somebody asked, is it qualified money? I don't want to. What is the definition of qualified? I want to go to that real quick. What is qualified money?
Qualified is if it's not taxed. Unqualified,
Non-qualified?
non-qualified, sorry, is if it's already taxed, like a savings, checking, some things like.
Okay, so we know those. When you're speaking qualified and non-qualified, that conversation is towards annuities, guys. I don't want to get you guys confused on that. It's very important to understand that that's going towards annuities when you start talking that language. So if it's coming from a whole life, it's being paid with what kind of money? Qualified or non-qualified?
Repeat that, what you
If
just
it's a
said.
whole, if she's paying for her whole life, she's paying for her whole life.
Eh,
How is she paying for it? Qualified or non-qualified?
wow. What?
She's paying from a checking account, guys. What kind of money is that?
Non-qualified.
Okay, so that means that that's how the when it's life insurance to life insurance, you should be writing that down if you don't know. Non-qualified means, these are terminologies that you're definitely going to want to know, especially if you're going to be doing retirement, which we're using the IUL in that sense right now. Go ahead, Blake.
Good question. Yeah. So 1035s, we're talking non-qualified money, right? Savings, it's cash value from another life policy. It is the surrender value, right? Because that could really kind of determine if this makes sense or not, right? We could have a policy that we're looking at rolling over and it could have $7,000-8,000 of cash value, but then you look at the surrender charges on that policy and all of a sudden the surrender value is less. If it's a brand new policy, there will likely be some kind of surrender charge. There will be a difference between those two numbers. So policy review, like Leo said, policy review, if they don't have the papers or they don't have any recent statements, they can get on the phone with the other insurance company and they can ask these questions while you're sitting there, right? Client can ask, what is the surrender value? That's the number we need to know, because that's the number we're going to input in the illustration software. And I'm going to pull that up now. So this is the case you were kind of referring to here, Leo. And you really structure the policy in the illustration the exact same way. And then we're going to add this lump sum. So you see this lump sum checkbox here. That's where we're going to put the 1035 amount. When I click lump sum details, this is where I put it in. And again, it's the surrender value amount and it's going in the 1035 exchange box. You're not going to ever use either of these internal boxes. It's unless you're replacing another F&G policy. That's where it's an internal 1035 because it's F&G. If it's any other insurance company, it's an external 1035. And then an external non-1035 is just cash out of their savings account or checking account, right? They have a lump sum of cash they want to put into the policy. The difference can be pretty big because that cash affects the guidelines much more. So that guideline maximum that we can put into the policy each year If they have $20,000 in their savings account, they want to dump into this, that money applies to that and could lead to the death benefit needing to be higher. But 1035 money, this 18,000 we're put in, it doesn't go towards the guideline level premium. That money is separate from that, doesn't count towards it. So we can get that money in a lot easier. So these 1035s can be very beneficial, get them into a policy that more fits their goals, right? It's not even a better or worse policy. It's, does this policy fit their goals more than what the current policy they have is, right? So Leo said 18,000. That's what we put in this box. And otherwise we quoted the exact same. Her budget was $200 a month, wanted 100,000 a death benefit. That's what we were looking for. And that's how you run this illustration. Pretty straightforward. Leo, any other thought that went into, like, do you want to like maybe talk about why you came to that 100,000 or what conversations
Well, I went to
led
the
to that?
100,000. I went to the 100,000 because the coverage was 130 originally. And what I saw is I asked her, do you still need the 130 as coverage? Because we could have gone up, right? And she said, no, my kids are grown. I would just leave this for my new husband, you know, because they just sold the house, but they still got one that they're still paying for. God forbid. She is, keep in mind, 69. She's well aware that she can die tomorrow. Like, she's well aware. And we didn't even know it was going to get passed. So we went through and I said, all right, 100,000. Let me just call Blake on the exchange. I think this was my first exchange. So I just wanted to know where to put the box. Also, this company, F&G, does not, if you have too much money, they do not hold your money in some kind of savings account. All right. I need to put that out there because some of you have written with other companies that do that. Like, if like, let's say you want to overfund an account and you send 20,000, F&G is not going to take the 20,000. They're going to take what will maximize, and you'll have to write that amount, where other companies will say they'll take it. But what they initially are doing is they're taking the money for that year, and then next year they're taking it from the escrow they got and putting it in again for you, and they're actually charging you for that. That there is a fee that's being charged for that. F&G does not have that option. So if you're ever gonna have somebody overfund an IUL like I recently had, which will be my next case, I'll tell you about. Because in the first year they can still overfund it by a certain amount, right? And it's that 7-pay amount. And I want him to go over that as well, because as agents, a lot of people ask now, the percentages are all different. So please, the one question that you would have to refer to Xperia or look on contracting is, how much do you get paid for overfunded amounts? If it goes past the target, you got to find out where it is on your contract level. Blake will not know that answer, but he will show you. Today he'll show you, like, if the person overfunds an account, how, you know, you will be seeing an extra paycheck even though it was already issued and you already got your advance. So that's what we're going to go over. I don't think this one was overfunded, but it probably was because it was a small one. So that was my thoughts in this one, was bringing it down, because it brought it down to 100,000, but it also cut how much she was paying, because it says 200 there and she was paying 165. But she wanted a little more money. And being that she's older, her cost of insurance was higher. So the illustration was cutting off short. So I had to bring it up to 200. It was either 150 or 200, and she went with 200.
Makes sense. And to the question earlier about what not an annuity, well, if you move that money into an annuity, how much does her beneficiary get if she dies tomorrow?
Let's get that 18,000.
Exactly, right? So did she need 130? No, but that's another part of the calculation, especially at that age. And biggest thing I'm taking away, Leo, is you're not telling the client what she needs. You're asking questions, and she's telling you the answers. They'll tell you the answers. You just gotta ask the questions, right?
Yes, sir.
Love it. So when you pull up this case here, you see it's $200 a month, and in year one, there's that extra 18,000 to get us to 20,400, and cash value is going to grow pretty well for her here over time. Policy runs well beyond age 100 through age 120. So great case here. And love this. And even because what people will sell with the whole lives is the guarantee aspect of it, right?
The guarantees, yeah.
So I love that our fixed account, which is what is this middle column is, if you didn't know, this middle column is our fixed account. If you don't want to use Morgan Stanley, et cetera, you can lock in a 4.75% return on the fixed account. Now it's not guaranteed to be 4.75 every year. It's 4.75 guaranteed this year. In theory, the number could go up or down a little bit in the future, but the fact that our fixed account still leads to steady cash growth throughout the age 120, I think is massive, speaking to the safety of this policy not lapsing. Do you agree, Leo?
Yeah, I see. See, the fixed account was the number I was reading the first time to her because I don't want to sell the fantasy of 6.19, and I wanted to give her absolute worst scenario in this situation, and it beat what she was making 2.5 and overpaying for something she didn't want. So that was another reason why the switch was necessary, and it was approved, by the way. If anybody was wondering, this case was actually approved.
Anything else you think is important on this one, Leo?
The max amount that you could put in, if you can go to Target and show what the target was and how that was, what's the most that could have been put in there?
Absolutely. So Target was 5208. So for those of you that don't know, target premium is what you're getting paid based on in an IUL. It's up to target, but the client has to pay that amount in, right? And the 1035 money does count towards that. So the question, do I get paid on a 1035 exchange? It counts towards the year one premium, which counts towards the target. So if she was only paying 2,400 a year, she's not paying up to target. Leo wouldn't get paid. We're not getting paid on more than that 2,400, but that 18 grand does count. So you would get paid on the full target for your first year comp with this case. And then like Leo was saying, look with Experior to see what the excess is up above that. But as far as the maximums go, guideline level premium, $5,681 a year. And that's where this money being a 1035, that doesn't count towards that. So in theory, she could go up to, that's about probably $460 a month or so. She could, if she wanted to max this out and even more maximize the cash value than what we're already doing, she could increase these premiums. She could more than double them essentially, right? So that's where you'll find that number to see what room is there. And that's where this being a 1035 money and not just cash, like, hey, could we just take that 18,000 out of the policy and just get it as cash and send it into the FMG IUL? No, because it's really going to screw up these guidelines when you get into the larger amounts. And that's why the 1035 exchange is so valuable.
Any questions while we're here? Because this is all on rotating. A lot of people have old policies when you're doing, listen, you can even roll in final expense policies into this. Now, if the final expense policy has more than I would say $2,000, anything less than $2,000, again, the way I would do it, you're still gonna get paid if it goes past target, is I would write up the regular IUL, help them get the cash surrender from their final expense. Then they can take that check and send it physically to F&G with their policy number on it, and it will go in the same way as if you did a 1035 exchange. Why am I saying this? Because if you do a 1035 exchange for less than $2,000, it's going to take you so much more work to get that policy issued and approved. I did it, and I'm still to this day, and it's been 2 months, and I love F&G, but it's been 2 months. I moved something from North American, only had about 1,500. I should have just taken the cash surrender. It would have already been issued. And now it's when it's going to be like it's finally going to be done, because the other company can hold your money up to 60 days. I want you to know that when 1035 exchange sometimes is not F&G. F&G will make the request for the money. They got up to 60 days to send you back that check. So is 1,500 worth it? No, they'll send it to the client as soon as they close the policy by law. So that's the kind of situation that you run into. That's much easier if it's less than $2,000 to not do a 1035 exchange. Any questions so far?
Yes, I have a question.
Go ahead.
What on the illustration, why wouldn't you do the other column? You said you did the 4 point something percent instead of the 6%. Why would you do that column instead of the other one?
I did
have-
both, but what I did was both when I showed it to her, but I showed her the absolute worst case scenario because of her age and how much it was. And I wanted to show her that even at its worst performing possibility, which is not the average in the last 20 years of IUL with F&G, I wanted to show her even in the worst case scenario, she was still going to have more money than she would have in any other situation.
Okay. Thank you.
No problem. It was just part of my conversation. I wouldn't do that with everybody, to be honest with you. I wouldn't. I would not do that with everybody. I don't even show this page because there's too many numbers. To me, it looks like the Matrix. I only use the calc results when I talk to a client. That's all I show. I don't go into the whole the illustration. When I go into the illustration, anybody who's sat with me with a client, I only show the first and second page. Everything else I explained. I explained the worst case scenario if they want to pay. I also explain what is the most they can pay in one shot to overfund it, if that's a question, if I'm dealing with that caliber of a client. And it's all on what that client's giving me. I'm not gonna sell somebody a Mercedes if they can't afford it. That's the one thing I don't do. So I keep it where they're at. Like I had a client this weekend. He's doing $1,000 a month. That premium came from having a conversation with him. I didn't make any suggestions. I had a conversation, asked all my questions, wanted to know his goal. And you can actually open that one up now if you like. That one, Morris, I believe his name is Morris. I end up doing just having a conversation with him and seeing what his goal was. He's in his 40s, like maybe, I think he's in his early 50s.
52 is what I'm seeing.
Yeah, he's 52. And he's a traditional guy. He never really learned much about advanced market. And his thing was, in his day and age, the big thing to do would be CDs. So how much rate do you get on a CD? These are all questions, guys. I'm asking you questions because these are things that you should at least know averages. Because if you know these things, then you know how my mind is working when I'm sitting with a client and I'm thinking interest. So how much does a CD usually get in interest? And how long do you have to have it in to get that interest? Anybody know?
A whole year. 3%.
They range in 3 to 4 point. I've seen the largest one I've seen is 4.5%. And that's usually a credit union. If it's not a credit union, you're usually not going to get more than 3.5%. That's note to self, guys. If somebody tells you, oh, you ask them, because here's the thing. If you don't scare the client with a question like, how much are you getting interest? How much interest are you getting? If they say, I don't know, that is your opportunity to shine. Why am I saying that? Because you know the percentages, you know what other plans you have. They're going to give a better percentage. But if they say, I don't know, and you don't know, you're back at square one. So you should know what CDs range, how long you got to keep it in. They know they know when it surrenders. Everybody that I know that's ever done a CD knows when they can take it out. They know that for a fact. They just don't know a lot of them don't know what they're getting. They just know they're making more money than keeping it in their normal bank account. So with him, he wanted to gain more money for a certain amount of time. He wanted to create retirement. So there's what we did. And I didn't come up with the premium. He did. Sometimes you need to shut up. I know it sounds cruel. I'm not being mean to anybody. I'm just telling you that this is what goes on in my mind. All right. In my mind, I was taught that he who speaks first loses the game. So when I ask a question, I don't assume. So I told him, okay, I asked my questions. What was your goal? What do you want to do? How much you want to have? All right. What do you think something like this you would be able to invest on a monthly basis without no problems of causing you any change of life? He said, I'm looking at my mannerisms. I could do 1,000. I said, okay. And I stayed with my poker face. And then this is what we ended up with. You could show the exchange so they can see where it goes again. I know I saw some people jump on late. Now, this is not coming from an account. This is pure liquid cash, meaning it's in an account, but it's not being transferred from one policy to another. This is a check that is being sent in. If you notice, it's in a different spot. This guy's overfunding it manually. Now I have a year for that money to get there. Either way, I'm getting the advance. Now, when that money gets there, if something happens where it goes past target, I will now be advanced again on the past target. If anybody's going to ask about, do you get paid on that? I want to answer that question right from there. So this is another non-typical situation where I used a 1035 exchange to create retirement and not life insurance. And this one I did as an option B. These are things I would ask if I was in the other side, like why you use option B. I use this one to increase because the life insurance portion was going to showed better increases, and it didn't. He didn't need the death benefit to be so high, and being that he's putting so much money up front, there's a certain amount of death benefit that's automatically applied when you're doing an illustration. So that's why I made this work on increasing, as opposed to the other one that I did that was leveled.
What was something else I noticed you did, Leo, that I like? You solved for max accumulation. And with the lump sum being included, you clicked on this box.
Yeah, I didn't want it to become a mech.
Exactly. So for those that don't know, when you're solving for max accumulation, our software is going to solve for a minimal death benefit to allow that cash value to grow. When you click this box, it gives you the true minimum death benefit. So that means what we're putting in, this is the lowest death benefit I could possibly get. If he didn't have the lump sum in there, you could leave this box unchecked, because leaving this box unchecked gives him some flexibility. He might be starting at 1,000 today, but have room to go up higher in the future. That's especially more applicable with clients who I'd say are in their 20s or 30s, right, Leo? Probably younger clients going to be making more money down the road.
$1 billion baby situations, I would not, unless there's a large amount of a 1035 exchange or money being put in overfunded, I would not leave that checked on a $1 million baby.
Now, check this out, though. When there's a lump sum like this, check that box. He's still actually going to have some flexibility. So let me show you what that looks like. Because with that money going in, we need the 7-pay guideline. There's 22,000 going in the first year. We need the 7-pay guideline to be above 22,000. So clicking that box got this 7-pay premium to 22,007 cents. So he has this thing completely maxed out for the first year. This 7-pay premium guideline means that's the most premium we can get in any one given year. But this guideline level premium, that's the most that he can average per year. So there are different guidelines. 7-pay is more for lump sums in year one, where the guideline level premium is ongoing average. So you can go a little bit above that guideline level premium as long as you're back beneath it in a future year. So by year 2, he pays 22,000 year 1, and then he goes back down to this 12,000 in year 2. So by the end of year 2, he's well below this guideline level premium.
And he could still put an additional $7,000 if he wants to.
Bingo.
Maximum growth, and max that out as well.
So he's still, when you have lump sums, you can click on that box and still give them flexibility and get them the best case. If you leave that box unchecked, when there's lump sums, it may really drive the death benefit up and hurt the growth, especially. And that's where the option B comes in, because, hey, if we wanted this exact same guidelines with an option A, this death benefit would have to be significantly higher.
You can switch it. You can switch it. I already have this printed, so you can show. It's fine.
Okay.
Let's see what it looks like. Let's show some examples. We still got another 10 minutes before BTO. Why not?
Love it.
And you might actually get a warning, because sometimes you get a warning right away, like, hey, by years this is going to happen.
Didn't get the warning. When you use the solve, we're typically safe from the warning. But look how much higher this death benefit is. It was 250 something on the last case.
Yeah, it was 250. Look how high it went. That means the cash value is going to be hurt. As a matter of fact, it's
and he's
hurt a
even more
lot.
restricted. Yeah, and he's even more restricted.
Oh, go back to the summary. I want to show. I want to see. I don't know if anybody caught that. Look at the surrender value. Let's say he got it and he surrendered it right away. Look, he's actually losing money, a
Yep.
lot, because he bought a lot of life insurance. He's used if he did this. This is a situation I would use if the client was very interested in life insurance. And now what I would do to give a comparison, because we do know that there is another version that we could use of an IUL that's good for life insurance. Which one is it? Anybody know? You can unmute and say it. Nobody wrote it. Nobody said it. Everlast. So if I see that I'm using towards life insurance and I'm picking this option and I see it's 407 and I'm looking at that surrender value, knowing that he put in 10 grand and I see that he's going to lose about 4 grand. Of course, I'm just rounding. It's 3 grand and change. I'm going to say, before I do this, let me see this version as an Everlast, because as an Everlast, it might be less surrender value and he might have more value and still have a high death benefit. And the cost of insurance is lower at his age group, especially on an Everlast. Remember, when someone starts talking to you about coverage, you want to go towards Everlast, but don't ever count out Pathsetter. Just set this up so it has a higher death benefit and then compare that one to an Everlast. I hope I made sense there. I think I did. I followed myself. If you're watching the video, just rewind, go back, slow down. You get it. Any questions? These are two that I've done. There are two different examples, two different 1035 exchanges, two different placements where you put the money, and two different situations in when I found where I could use this for retirement as opposed to just life insurance. What's most important that I've done that I can actually say, part of his skill, part of his luck, but if you work hard enough, the harder you work, the luckier you get, is asking the questions. And try to have a poker face when you ask them. And stop counting people's money. I have a question, but it's not 1035 exchange. So unmute and ask it.
Hey, Neil, what do you mean by that? Start counting people's money. What you mean? Give me an example.
An example is a lot of times we assume that someone is only willing to do like a 200, 300 because you're not willing to do more than 200 or 300. Your job is to be there in mind on how you can help the person. Honestly, I don't know. The guy I met this weekend, I don't know him from a can of paint. And if I judge him by anything, if I judge him by what he was wearing, if I judge him by how, he spoke, I would have been like, all right, here we go, another $200 policy. The important part was shut up. That was my important lesson to myself. And listen, I'm my own worst critic. I learned to shut up. When I'm talking to somebody, I really don't even blink. All right. So I ask my questions and I try to get what is their budget without saying, hey, what's your budget? Because that's like the last alternative. You're just like, just tell me your budget. It's easier to work with. Once I know your budget, then I know what I can maneuver. But as you show value, that number will change. That's why I do not do IULs over the phone. It must be a visual. You can do what you like. The only thing I'm ever going to do this IUL is an IULE that I'm selling as life insurance for just coverage. And now I can even do that with Everlast, and I'm willing to do that on the phone because that's easy to show them coverage and let them know, hey, this is like getting a hamburger. You're just getting cheese and mayonnaise. That's the money. Like that. They're not interested in the money. You just tell them, hey, by the way, you got living benefits. Let me tell you what they are. And there's some cash value in there for you too. So if you ever need to take out cash, call me. I'll let you know how that works. Let me ask this question. And then if we can, before we go, if you can walk us through the portal, which I think is important to get people in the portal. Once you have a client, I'm going to ask that question. Don't go nowhere. Where'd that question go? Here we go. I have a client that needed an amendment signed. And when I called F&G, it said because of her age being 50, it was under the recommended amount of $150,000 that's why they needed an amendment. Can you explain what that's all about?
I'm guessing there's some miscommunication there. Text me the policy number and I can look into it. I wouldn't know off the top of my head. That doesn't sound like a reason we would ask for an amendment. There was probably something else. Typically, amendments come if there's something different from when we submitted the application versus how it got issued. Could be the premium changed, could be the death benefit changed, the
If there was
allocations.
any change, if there was
Yeah,
any,
whatever the client signed on the app, there's something that's now different. Allocations, it could be anything, beneficiary, could be a million different things. So something was tweaked on there that we needed an amendment. It wouldn't be for that reason. So apologies for the confusion, but yeah, just text me policy numbers. I can provide me updates on that.
That's like an isolated situation because I have the same situation going on right now. So it is just exactly what Blake said. It could be anything. It could be a name change. It could be a beneficiary, what you allocated that beneficiary to be. And if a beneficiary is named as a friend, you have to show, this is what I just recently learned. You have to show the insurable interest. So if that person does not have insurable interest, they can be a friend because that is a drop down menu for you to take to select. But if it's not an insurable interest and they don't have a financial loss, if that person passes away and you listed them as a friend, then that may be a problem. So now you're in a situation where they don't know and they will change the beneficiary from the person you selected to the estate. And that is what I'm going through right now.
now, with those, just so you guys, I don't know if everybody in CEO life understands the benefit we have. So I'm going to say it and it's going to be recorded and hopefully it never goes out. You guys can literally text Blake. Like, I just want you to know that and then also his partner, which is on California time. So guess what? If it's 9 o'clock and you don't want to bother him, because, you know, some of us do have a conscience and we're like, I say some of us because I'll call the man at 11 o'clock at night. I don't care. But some of us have a conscience. Text, what's his name again? Oh my God, we wrote his name. Glenn. Text him. He's in California time. He's 3 hours behind and he'll get you your answer. I mean, they really, 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 really work with us. And that's not everybody that has that privilege. I don't know why he likes me, but I'm not going to change that. The numbers are in the chat. And I saw somebody have one more question, so he can go through the portal real quick because it's not hard, but I want you guys to know how to get to the portal. If you have your own policy, set up the portal. And this is the way I tie down and get other referrals, guys, by the way. Hey, when you get your policy, give me a call. I'll help you put everything on the portal. That's another chance you get to get those referrals. You got a second opportunity within the first, while that is fresh in their mind, what you did for them. Just saying. I saw that you have another question, Alemnish. It says you got 2. What's the other one? You didn't text it, so you might have to speak it.
I think she might have been referring to 2 amendments.
Oh, okay.
2 cases with amendments.
If you guys have an amendment, I have one coming up, and I'm going to tell you mine real quick so you understand where it came from. My amendment is because they asked for a social security card. So now I send a social security card, right? So guess what? The social security card has a middle name. I didn't put the middle name on the application. I got to now get it signed with the middle initial. It's a contract. I don't know. Can't do anything about it.
Yeah.
It's all legal. It's legal documentation. If they die, everything has to be done legit. So being that from now on, when I take information, I'm asking if they have a middle name, do they use it? If they're using the signature, I have to put it on the application because if not, it's going to come back as an amendment to have it signed with their middle initial. And there's nothing more annoying than that. And it's my fault. But I didn't think that was such a big deal. I don't use my middle name. I don't even use my middle initial. If you find that out, it's because you looked at my license. But you know what? If I get a policy and I don't put my middle initial and now they ask for ID and I send that ID, that person's going to have to get an amendment because I legally do have a middle name. Some people legally do not. Just word to the wise. That's a little thing. I don't think she has another question. It's not there. So if you could show the portal, it'll be great. And then
Yep, absolutely. Let me pull this. Yeah, I know you guys we got another call to jump on, but real quick. This is the information we need to get signed up with the policyholder portal. Really easy to help your client register. They don't need a password at first. You register with your policy number, right at the top here, social security or ITIN, phone number, zip code. That's how they'll verify you.
Can you drop that? Can you drop that in the chat?
Yeah, absolutely. So I got to figure out how to add an attachment in here, but yes. So once, hold on, sorry. Okay. Once you get in there, it can create a password that they can log in using next time, but really easy to register with that information. And you'll get into a portal that looks like this. So this is just a dummy policy we have. We don't even sell that product really, but these are the different service requests. So we can change the bank info. We can change the account and routing numbers. We can update beneficiaries, change mailing address, client moves, name, if they get married, maiden name, etc. Change the amount of premium we're paying and the premium mode, which leads me to a fun announcement. We can now draft quarterly, semi-annual, and annual premium payments. So if your client has been paying monthly but would prefer to get their annual premiums drafted, you can switch this over now in the portal. Real easy to switch it from monthly. If I click on it here, change plan premium or change mode, next, annual billing, and how much premium. And then it would hit next, it would submit it. It has me sign with the initials. So it takes 20-30 seconds to make any of these changes. A lot of cool things you can do in here. You can access policy documents and all kinds of cool stuff there. So that's the portal. See annual statements. You can also request a loan and change your crediting options, change your allocations. So those are the things you can do in there. Really easy to access. Definitely something you'll want your clients to have access to and something they can make these easy changes on versus getting the form signed and emailed in.
All right. Well, I hope you guys got a lot today. 1035 exchanges has been something that is really starting to happen a lot lately, especially with using this as retirement and doing policy reviews. Remember, they could be done with any whole life policy, anything that has cash value. Let me rephrase that. Any life insurance policy that has cash value can be rolled into a 1035 exchange. To make sure I reiterate this point, if it's less than $2,000, do not do the 1035 exchange. I prefer you do the policy. Again, I say I because it's just from my experience. Anybody's entitled to do as they please. I would help them call the other company and get them their cash surrender. They'll get a check in the mail, and then they can physically mail that to F&G. If you need the address, just hit me up, hit Blake up, because there's different ways to send it. If you're gonna do express, if you're gonna do, if you're gonna do it through regular mail, and there's just send them the check with the policy number written, and they'll put it in the account. If it hits over target, you will get paid as an agent. If it doesn't, hey, you already got paid what it's supposed to be paid for. In a lot of cases, we're underwriting IULs, just so you know. We're underwriting them. So in most cases, unless it's a big lump sum, you're not going to hit over target. I'm just giving you that fair warning. If you need any help, once you do the illustration, you can reach out. I'll look at them. I do have a calendar. That's the only way that you'll really be able to see me because I'm running around. I am on a big SED run myself. So I will make time for everyone. But just remember, I am running. I am running as well. So that's why I use the calendar. It's nothing personal. It's not personal against anyone. But I will look at illustrations. If you email them to Blake, if you call Blake, he's also is willing to help. His partner, like I said, Glenn in California, I met him again in person in the convention. So he's already put on alert to help us out too. So guys, take advantage of the tools you have. We're going to have another call with Blake every first Wednesday, unless something comes up. It's every first Wednesday of the month, 7 o'clock. We're not going to run into 8 o'clock. It was at 8 o'clock today, but we changed it to 7. People were already on at 7 because we're on autopilot. Those of us that are plugged in are plugged in. So with all that being said, guys, we do have a BTO. Most of you should have gotten the text already. It is Darren's Zoom link. I would ask you to head over there, watch the BTO so you can learn how to do one, learn how to participate in one, because once you do that, that's how you get better. With all that being said, I'm going to log off. Anybody else can talk. Not log off. I'm going to shut the recording.